Welcome back. You're watching Opening Fire. JSW Energy is in focus. Yesterday, the stock shot up post the results came out. 311 crores in terms of PAT performance definitely was a beat to the street, and the stock reacted equally well. Today, however, it's cooled off a bit, a 1% cut right now. Mr. Sanjay Sagar, Joint MD and the CEO of the company, joins us right now from Mumbai to talk us through the Q3 performance. Mr. Sagar, thanks very much for taking out the time. A very strong quarter this time around. What led to the growth?
Yes, Devina, the quarter has been encouraging, and it's been an overall good performance by the company on the operational side, and further helped by the lowering of fuel costs and the improvement in tariffs. So it's been sort of a multiple reasons for the marked improvement in this quarter.
What is the extent of the savings because of lower fuel costs, and overall, how much of a tariff improvement have you seen this quarter, which has boosted profits?
Well, on a quarter-on-quarter basis, our fuel cost has come down by approximately 18 to 19%, and there's been an improvement of about 7 or 8% of the tariff overall. The generation has gone up by a whopping 20%, and all these factors put together have resulted in what you see in this quarter.
Can we expect this to continue in terms of, at least for tariff purposes, a 7 to 8% bump up over the next few quarters? Is this the rate at which you will be running over the next few quarters as well?
Well, not exactly, but we are expecting the tariffs to remain stable at these levels. More or less, and not much change. Similarly, we're not expecting much change in the fuel costs, also in the imported coal indices across the next couple of quarters. So we expect them to remain range bound, both the tariff as well as the fuel costs. Operationally, I don't think there's much room for improvement. We are already operating at a 91% PLF.
Yeah. All right. And for the Vijayanagar plant, it's almost 100%. It's 100%.
We can sort of expect. Yes. Vijayanagar is over 100%. It's at 102%.
All right. What has been the
Barmer is 81%, and Ratnagiri this time has been 90.
All right. Go ahead, sir. Sorry.
Sorry. No, I said Barmer was at 81% this quarter, and Ratnagiri was at 91. So, as far as the PLF is concerned and the operational performance is concerned, I think this is where we'll remain.
For merchant power, particularly merchant realizations this quarter?
Well, merchant realizations were slightly above expectations. We had given you a guidance of about 4.25 to 4.5, and they hovered around slightly above 4.5. So they were slightly better than expectations. We were helped by the improvement in the performance of Barmer, both in terms of PLF and the revised tariff that we got since October, and by the performance of Vijayanagar and Ratnagiri, of course.
Could you overall talk a little bit more about future capital expenses that you want to do in order to increase capacities, where right now the PLF is not 100%, if you're actually going to do that?
Well, at the moment, Devina, the thermal projects that were in the pipeline, we've sort of put them on the back burner, because there is not much clarity on the policy with regard to both the sales of power as well as the allocation of coals. Most of those projects, our expansion projects, other than the Ratnagiri expansion, were based on domestic coal. And there's not much clarity either on the availability of domestic coal or on the long-term sale of power. So as such, the thermal projects for the time being have been put on the back burner. However, we are going ahead with the Kotter hydro project, for which we've recently got the final forest clearance. So we should be going ahead with that project in the coming years.
What is
the only one till we get more clarity on the policies.
All right. So as of now, what is the arrangement for fuel and raw materials for feeding the plants? Are you comfortable with the already held inventory of?
Well, the Vijayanagar and the Ratnagiri plants, as you know, are based on imported coal. Availability of imported coal is not an issue, and it is only the price and exchange volatilities which sort of continue to bother all such plants which are based on imported coal. Barmer, as you are aware, is based on a captive mine, so there is no issue of fuel there. So availability of fuel is not an issue as far as our operating plants are concerned.
All right,
and I don't see it becoming an issue even in the future.
All right, just one last word. If you could talk a little bit more about the quarters to come. Is this kind of a performance? Should we keep expecting this outperformance from JSW Energy?
Well, as I told you that we expect the operational parameters, the tariffs, as well as the fuel costs to remain more or less at the same levels. So I don't see any reason why we should not continue to do equally well.
Got it. Mr. Sagar, really appreciate you taking out the time. Thanks very much for joining in and highlighting quarter 3 for us for JSW Energy. So indeed, a stellar quarter for them. Stock, however, is cooling off a bit, some profit taking in today's session, down about 1%. Let's go back to Tata Motors.